break down completely. Sounds like that's us coming to that anyway. Anyways, the purchasing power of the monetary unit, the dollar, will decline more and more until it finally disappears completely. And that's Ludwig von Mises. And that's what we are doing. I mean, it's exactly what we're doing.
Here's Andy Schectman discussing another important factor in today's video: a thriving environment for metal accumulation amid growing unease about the nation's future. He highlights societal divisions, changing norms of respect and celebration, and potential banking industry shifts. Schectman's insights prompt a reconsideration of past opportunities and the impending choices the nation faces. So keep watching this video till the end. Let's look at Andy Schectman again.
Shanghai Cooperation Organization and the Eurasian Economic Union joining Brics, all of a sudden you have a very, very, very formidable foe, even if at first it is only a settlement currency, not a reserve currency. If I were doing this, settlement would be first, reserve would be second. But if everyone continues to settle, not in the dollar's demand goes down, the supply goes up, the value goes down, inflation goes up, interest rates go up, we get there the same way. And look, the Chinese and all of these countries who still own our stocks and our bonds, and well, they have a vested interest in slowly removing themselves from this. And all the dollar denominated debt has to be paid in dollars. You might even see the dollar go up at first. But in the end, this is a trend, I think, that will ultimately be very negative for the US dollar, irrespective of the announcement on the 22nd. When you look at the finances of the US, after they raised the debt ceiling, after that debacle of raising the debt ceiling to no limit, in 6 weeks, the numbers went up by over $1 trillion, but it took 13 days after they raised it for the national debt to go up by $600 billion. That works out to $500,000 every second to the national debt. And so we've gotten to a point where the numbers just keep growing and growing. And how do you add $1 trillion to a debt in 6 weeks? You really don't. I mean, unless you want to destroy the currency. And ultimately, they have no choice but to inflate. There's no way they can ever pay these liabilities, these unfunded liabilities, unless they continue to inflate. And I think that is all part of the deal. In other words, the world understands this. And I think for the last 52 years, the world's been on this dollar standard. And I think that what you see here is safety in numbers. These countries realize this is their shot, but they have to do it the right way. And if it means doing it on the slow road, so be it. Ultimately, this is about a situation that I think we've passed the point of no return. So August 22nd, I will be more inclined to believe that things are at the point of no return if the SCO and the Eurasian Economic Union join the Brics. If you see that out of this meeting, well, Katie, bar the doors, because it's just a matter of time before Saudi Arabia says to the world, hey, everyone, listen, thanks. We appreciate what you've done for us. But look, all of our brothers and sisters with OPEC on the Belt Road Initiative and what amounts to 80% of the world's population or more, we're not going green. We respect that you want to. So we're going to now, until the new Brics currency is fully operational, we're going to take the petro yuan and we can convert that into gold on the Shanghai Gold Exchange, or maybe whatever it is. Maybe it's the Brics currency, who knows? But the point is, when they make that announcement and all of the world has to make a decision of shedding a good portion of their dollars that they've been holding in favor of a new settlement currency, not a reserve yet, but a settlement. Well, that creates a big, big problem for the dollar, and inflation and interest rates and the valuation of all the stocks and bonds in this country that are inversely correlated. And it's an interesting thought when you realize that much of the institutionals have been bearish and on the sidelines, yet if you look at the amount of interest in the stocks lately, it's been off the charts, and it's all through the American public, not the big institutions. And as the world is dumping US treasuries, the American public are flocking to them. Is it the perfect storm? I don't know. It sure kind of seems like it is, like it could be. And if you realize that just between Microsoft and NVIDIA, they had $175 billion in market cap. That's more than 462 of the S&P 500 companies. It's more than Nike, Wells Fargo, Walt Disney, Morgan Stanley, you name it. So you have this tiny little group of companies holding the market up to these stupid levels. And if the Fed comes out and says no more rate hikes, watch what happens. It's going to blow off the top. But it's interesting also to realize that the US Treasury is financing its deficit right now with short-term T-bills using the reverse repo market. They've come out almost basically and said that. And they are using it because the money that went into the reverse repo market realizes they can get a better return by a little bit going directly to the Fed at like treasurydirect.gov, going directly to them, removing the risk out of the banks and going directly to the government. And you're seeing the reverse repo market drain, and it's going directly into treasuries. But I want to read you one quick thing, and I know you're a big fan of Austrian economics. If the practice persists of covering government deficits with the issue of notes, then the day will come without fail. Like I'm saying, Chris, without fail, it's going to happen. I don't know when. Anyways, the day will come without fail sooner or later when the monetary systems of those nations pursuing this course will break down completely. Sounds like that's us coming to that anyway. Anyways, the purchasing power of the monetary unit, the dollar, will decline more and more until it finally disappears completely. And that's Ludwig von Mises. And that's what we are doing. I mean, it's exactly what we're doing. And it's eerie, actually, because ultimately they have to continue to inflate to pay off the debt that we have and to keep the game going, to keep this system going. And if they don't, it's a big problem. So in the end, whether it's the 22nd or 2 years from now or whenever it may be, I think there's going to be some difficult times in this country. And our administration, in my opinion, is only fostering and aiding and abetting this ultimate outcome. And the premiums are the lowest level I've seen since before the pandemic, or right at the pandemic. And the availability is the best I've seen since 2020, and no delivery delay. It's just mind-boggling to me. I mean, it's schizophrenic. It's one day you see a problem with the banks and 14,000 clients beat down our doors over 45 days, new clients. And then the next, everything's okay. And, everyone can go back into the water. And if people are wanting to add any metal or accumulate any, honestly, it's the best environment I've seen in 3 to 4 years. And what is very strange to me is that I feel more anxiety about the future of this country today than I did 3 years ago or at any point since. And it's less to me about the economics of it. I've just kind of resolved to believing that will happen. And it's more about what is happening inside the borders of this country and the division, and the divisiveness and the anger and the inability to have a rational conversation with people, and all of these things that are being thrown down, shoved down our throat, where, the world I grew up in, you were taught to respect people, right? That's what I learned, but you didn't have to celebrate everyone. You didn't have to celebrate transgenderism. You didn't have to celebrate, structural racism and pay reparations, and all of these things that just create so much animosity and divisiveness and anger. And then you look what's happening in our cities and the violence and the crime and all of these corporations just pulling up and leaving. And, that's where I think the catalyst is going to come from, the commercial real estate and the pressure that's going to put on the regional banks who hold 70% of it. Remember that the commercial real estate loans largely are non-recourse, meaning, bye, I'm done. Here, take the keys, I'm out. Because you can't go after them personally. So you just saw another big building in Atlanta, just bye-bye, and they gave away $100+ million in equity. The largest hotel in San Francisco, the biggest mall, bye, we're gone. And at some point, that's going to put some serious strain on the regional banks. And this time they're going to be bailed in, not bailed out. And when that happens, all hell breaks loose. Once again, premiums go up, the availability goes down. The mainstream public says, my God, why didn't we do it back then when we thought about it in March and April? You said it was better and it wasn't. I knew it. That's going to happen again. And, Janet Yellen told us herself, expect more bank consolidations into the fourth quarter. And there's a lot, over a few $100 billion, I believe, of leases and loans that need to be reset into the fourth quarter. So for those people who still understand that this isn't over yet, this is the time to act, as far as I'm concerned.
It is interesting to consider Andy Schectman's candid observations around the intersection of economic optimism and societal unrest. He reminds us that our decisions today could shape the course of tomorrow as we navigate a landscape of shifting values and potential financial repercussions. Having watched this insightful and informative video, what have you learned? Feel free to share it with your friends and subscribe to receive more videos. Thank you.